is operating as a sole trader now more tax efficient than through a limited company? This answer may surprise people, but in some cases it can be. Now, I'll caveat to say always do the maths, run the numbers on your own personal situation to know for sure. But I'm going to give an example here using profits of £50,000 to give you a bit of a glimpse of how the numbers work. So as a sole trader, you're automatically taxed on your profits. So if the profits are £50,000, that's what goes on your tax return. You'll have your personal allowance to come off that, your £12,570, and the rest you will pay tax at 20%, and you will pay class 4 national insurance at 6%. So sort of a 26% tax rate. There'll also be a little bit of class 2 national insurance to pay as well on top of that. Now, as a limited company, if you're at that £50,000 threshold, first of all, you pay yourself a salary of £12,570 typically. That may change a little bit depending on the employment allowance, but let's just say for whatever reason you get the employment allowance. So that would reduce your taxable profits, your corporation tax profits, to £50,000 less £12,570. The same as a sole trader. So in this case, as a limited company though, you'll be paying corporation tax on them profits at 19%. But then any cash you wanted to get out of the company after that, you into your personal hands, spent personally, you would be paying dividend tax at 10.75%. So there is a dividend allowance of £500, but on them numbers you can see sort of 19% corporation tax on the first chunk of it. Then the profits after the corporation tax, you're paying 10% dividend tax, 10.75%. So you can see the 19% corporation tax rate, 10.75% dividend tax rate comes to 29.75% versus as a sole trader, 20% tax, 6% national insurance, 26%. There's a little nuance there because your dividends come after the taxable profits, after the tax is deducted. But the numbers can work out that actually being a sole trader is more tax efficient. Now, I've given the example of £50,000 profit deliberately because this is where a limited company can be more beneficial, because you can be more flexible on taking money out of your limited company. If you are a sole trader and you make over £50,000, you're taxed on all of your profits, so you're automatically going to be paying higher rate tax, which then you're looking at 40% tax and 2% national insurance, so 42% tax rate. As a limited company, you can decide what you take out of that limited company. So you can decide, actually, I'm only going to draw out personally up to £50,000